traders? Nick with Vant Trading here, and I'm very excited to bring you another trading chart setup. This is a setup that I've been probably using since I've started trading professionally and full-time for about 6 years now. And it has moments where it works fantastic, but like every single trading strategy out there, there are market environments where it doesn't work as well. That is why, as day traders and traders in general, we need to diversify our playbook, diversify the arrows in our quiver to make sure that no matter what market environment we are facing, we have strategies that we can rely upon. Right now, this strategy has been hot for me. This week alone, I've probably made about 10%, and it's been a very profitable strategy. This is a very easy strategy to take and mold for yourself. It's very easy to understand. It's not going to be complicated. I'm not going to be throwing math at you, don't worry. And I'm not going to be throwing these really abstract ideas or anything like that. I believe that when I present you with this strategy, you're going to look at it and you're going to be like, you know what, this makes sense. You know, it's very logical. Now, obviously, there are going to be times when this strategy doesn't work. The strategy does not always work. No strategy does. But if you can kind of get a feel for it, watch it a little bit, maybe put some scans out there and really kind of study it and try to take some time to understand it and mold it for yourself, you may be able to take it and really find a profitable, consistent strategy out of it. Now, I am not telling you to take what I give you, write it all down, and do it step by step. That is not how you trade. What you need to do is you need to take what I give you, you need to fit it within your trading parameters. Some traders don't like overnight risk. Some traders trade different size. Some traders don't trade other kinds of stocks. I need you to take what I give you and really try to work it in so that you're comfortable with it, so that your risk parameters are acceptable, your capital allocation's acceptable, and so that you can become a better trader and take what I give you and really make it your own. So what I'm going to do, enough of my rant, I'm going to go through just 3 or 4 quick slides, and it's just going to be breaking down the strategy, kind of the thought process, getting just a little technical with it. Bear with me, it's going to be a quick slideshow, and then I'm going to actually show you a couple charts. I'm going to show you the stocks I traded this week using that strategy. I'm going to show you exactly where I bought and sold and what my thought process was, and you're kind of going to be able to look at it and get a feel for, okay, so, you know, this is an example of a trade that he actually made. And these are trades that I've called out on Twitter, I've called out on our podcast, our morning videos. Hopefully this is going to be something that's going to be easy for you to take and digest. And we're going to go through some actual examples throughout this whole year, not just this month, not just this week. I'm going to show you a couple charts. I'm going to show you about, 7 charts, including some that didn't work. So you can understand the risk and understand what it looks like when the strategy doesn't work. That is going to be very important for you to understand. Okay, so first off, I want to make sure that you as traders, whether you're new, inexperienced, beginner, experienced, whatever, you can take this strategy and use it for your own. You don't have to be an experienced trader, don't worry. But regardless, I want to make sure you understand something first, and that there are different types of stocks out there. I hate to break it to you, but not every stock is the same. In fact, every stock has different personalities. You know, you can't look at one stock and then look at another stock in a completely different sector with a different market cap in a different industry and think that they're going to behave similarly. For example, there's retail stocks, pharmaceutical stocks, tech stocks, blue chip, penny stocks, low floats, whatever, energy, ETFs, ETNs, ADRs, whatever you want and whatever you can think of, it's probably out there. And you would think that it doesn't matter, but it does. It does. For example, Tesla and Apple right now trade very differently than, say, Ford or Disney or Goldman Sachs or any of those, more kind of blue chip stocks. Tesla and Apple are tech. They're hot. They're new. They're right now they're running like crazy, and they have a lot more risk to them, so they have a lot more upside. Ford, Disney, Goldman Sachs, they're a little more stable, a little more ingrained in the economy to an extent. Some have dividends and things like that. If you also think about it, there's also different risks and different volatility concerning these stocks and personalities. For example, a pharma and a biotech stock might move more because they have more overnight risk. Overnight, a pharmaceutical company could have a bad study result for a new drug and tank and shit the bed, and next day they're down 20%. Or vice versa, they could have great news and be up 20%. Every stock has different risks associated, different personalities, different volatility, and that's why, when we talk about this, you need to understand that some plays may not work in certain sectors. Sometimes the personalities of your trading strategy with the sector that you're trying to trade in may not mesh. That doesn't mean that the strategy doesn't work necessarily. It might just mean that you need to try to either adapt the strategy to fit that criteria or change the type of stocks that you're trying to trade that have a personality that more adequately fits the trading strategy that you're using. Obviously, you wouldn't want to try to use some fast-paced trading thing that's supposed to make dollars and swing like crazy on a stock like Ford or something that doesn't really move, or Bank of America or something. I mean, they do move, but not really, not like a tech or a Momo or something like that. Now, the setups here for this strategy, the examples I'll be giving you are mostly focused on some low floats and some momentum stocks. I'm not necessarily talking about penny stocks here, so bear with me. This isn't necessarily all sketchy companies. I have seen this work on big companies. I've seen it work on AMD. I've seen it work on stocks after earnings. So it's a good opportunity for second date plays, things like that. So you can possibly take this strategy and fit it into whatever stocks you trade. If you don't like the fast-paced Momo stocks, or even just the medium, kind of stocks that move a little bit more because, they're kind of popping on whatever news, then that's fine. You might still be able to make this work. So it could work on others. Let's talk about the setup though. So first of all, we need the stock on the day before we trade it to have or on really the day of we're trading it, it's really going into the next day, to have a breakout day. And what I mean is it needs to break resistance level on the daily chart. I need this stock to burst through a level. It doesn't need to run from that level. In fact, I'd rather it not run too far. It happens sometimes. Not every stock setup's going to be perfect, but I need it to penetrate that level or really test on that level and ideally break through it. The stock ideally needs a catalyst. It needs some kind of news story or some kind of reason that it's done this. It could go up and you could still try to play it without the catalyst. The winning percent might decrease a little because there's a little less reason for follow through. Now, what the setup needs is we need that stock to close at or near the high of the day. And that close needs to pretty much be breaking an important resistance level. So it's breaking through an important resistance level that it's been held down on the daily. It needs to be a pretty decent level. It needs to be closing up there. It needs to be closing strong. I can't have it going all the way up there, coming all the way down, and closing at the lows. That doesn't work. I also need some decent volume. Volume is going to make sure that there are actual participants in this move. And like I mentioned, I kind of need a catalyst. There needs to be a reason for traders to be looking at this stock. Maybe the news came out a couple of days ago, maybe a day ago, maybe today, what have you. There needs to be, some kind of catalyst. And that can vary. I've seen a lot of different catalysts in my day. It doesn't have to be some big news source or whatever. Also, it obviously needs to have acceptable risk parameters. I can't be buying this thing and, it's $1,000 stock or something and, it's possible that it could gap down and I could lose a whole bunch of money. You need to be smart with it, and you'll see that. It's not a major thing in my opinion. Now, what happens? Well, like I said, the stock breaks through key resistance during the day. This day needs to have some decent volume. We need to confirm that there are actual participants participating in this move. If there is no one else in this move, it's not real. You're not going to get the follow through we need on the next day. And so what then happens is it's going to need to look like it's going to close at those highs above that level, or at least right at that level. And so the play is, many times I will take a long position overnight. Now, I'm not buying right at the close necessarily. You need to anticipate a little bit here, and it might sound weird, but you'll see when we go through some of the charts. I like to buy a little earlier if I think it's going to continue to squeeze into the close so I can get some favorable price action, but it still needs to meet those criteria. So we're going to be going long in this position right before the close, and our goal for this trade is a gap up higher the following morning. The next morning, our goal is for this to be opening higher than it closed the following day. And many times, you also will get a squeeze higher that following morning. So not only will you just get that gap up, a lot of times you get a following squeeze. So really, it's just that momentum up that we're riding. A lot of people are riding it up. It's squeezing higher. You got a lot of shorts probably covering. You have a lot of people seeing that breakout. And if it's a momentum stock, Momo stock, it's still kind of hot and a lot of people are watching it. A lot of times it will gap up. It doesn't always. And that's why before we go over the charts, last slide here, I want to talk about risks. You're obviously overnighting a Momo stock in this case. Overnighting any stock always has more risks than just day trading it. A news item could come out overnight. You could get some kind of headline against you, It's just shitty timing. The market happens. You need to understand what kind of stock you're trading. If it's a really low price stock and they've just run, they could do a secondary offering, offer more shares out there and knock the price down. You end up, down in the trade, and it happens. Maybe bad news just happens to come out on the one night you decide to buy that stock. Maybe a company or a corporation like Citron, who likes to come out, see these stocks that are running really high and put a short target on them, saying that they shouldn't be that high. A lot of people read some of these headlines in these publicators, and when they see they put out a new short target, they'll pile in. Especially if they put a really low short target on it. So something like that can happen. So before you enter one of these stocks, you need to have done your analysis, and you need to know, all right, if I buy this thing at this level at about $15 a share, 50, how far down could it go? Theoretically, it could go to zero. Always remember that. Never risk 100% of your capital in these trades. In any trade, it could go to zero. Any stock could go to zero. Now, you need to also just look, all right, well, if it fails, could I lose a point realistically? Could I lose 2 points? If a bad headline comes out, all right, what's an acceptable risk parameter for me? And then that's how you decide on, all right, am I going to take this? I also just realized that my face has been covering this. I apologize. You need to also be looking at it and decide, how much am I risking? Am I willing to enter this trade? And that's it. Once you've kind of decided that, you're ready to enter a long position into the stock. It can be into the close. It could be midday if you're really confident in it, but that leaves a lot of time for that stock to drop before the close. It really depends on the situation. Now's the fun part. Now I get to show you some actual stock charts. I'm going to go through it with you. We're going to look at where I bought, where I sold, and you're really going to get to understand exactly what I was thinking on this. And it's going to be kind of fun. Now I want to show you one that I traded this week that was fantastic. This one made me a lot of money. It definitely had some risk associated to it, but I've been trading long enough. I knew my risk parameters. I have a whole system down. Anyway, NIO, N-I-O. This is an ADR, which means this is actually, I believe, a Chinese company. And it's an electric car company. It's been a hot sector, obviously, and as you can see on the daily here, disregard all my lines. It's been a hot stock, and it's gotten a lot of interesting movement. Now, the day I traded it was right here. So you see this nice kind of moving up. It kind of baselined almost along this 20-period simple moving average, and it started curling up. Well, right here on August 25th, bam! You had a nice fat volume spike. This thing busted out. I don't even think this one necessarily had a news catalyst. I think this one just kind of ran because it's been a Momo stock and it was busting out. Now you had this kind of it was kind of being weighed down here and it was kind of soggy and it busted out and it looked like it was closing at the highs. So now let's zoom on in here to the intraday chart. I'm going to show you exactly the day here. Is this not one of the strongest charts you've ever seen? Not really, but it's still pretty freaking strong. This one, was clearly strong all day. And so going into about 3 o'clock, right about here, I see this. It's sitting at highs. We're on a breakout on the daily. You've obviously got a very large volume spike, and the sector's been hot. It's had a lot of headlines over the last couple of months. I'm like, all right, I'm going to start buying, and I'm going to see if we can gap this one, especially based on this incredible move on the daily. I think it's going to continue to push people up. People who are probably shorting in here and accumulating are probably getting squeezed. And so I started accumulating as we kind of started moving into the 3 o'clock hour. Now my average price was about $17.55-ish by the end of it. I kind of started buying along here and just kind of started accruing. Got a little spooked as we started dropping, but they're going to drop a little, all right? They're not going to necessarily close at the top tick. This one did. Great, even better. So, by entering and anticipating and planning my trade out, I was able to get favorable entries as it continued moving up. So by the time it closed at 1780-ish. I was entered around 1740-ish. I've got 40 cents to work with, and that's great. And since then, after that, it did nothing but move up and up. Got a little bit of a drop here. This is the following day, and this is pre-market. Now, I don't necessarily exit on pre-market, especially this early in the day. This just happens sometimes. I will keep an eye on it. If you want to manage stuff like that, you can. But by the open, that $17.50 entries was now trading at $19. I did something stupid, and I exited in pre-market. I didn't wait for the open. I saw us kind of start to move lower here. I don't know why. Cost me an extra 50 cents at least, because as you see, in the morning, we got the squeeze up in the first couple of minutes. Now, if this stock started dropping on the open, get out. don't need to play around with the momentum. You got what you got. Get out. You may be able to devise a strategy where you can hold and maybe work into a longer term trade. It's up to you. For me, I'm out after the morning squeeze momentum. And you got that in Neo. And you got a fantastic squeeze higher. It was a great almost 2-point gain. Actually, it was a 2-point gain. 2-point gain, so that's 10% on this stock alone, I think. So that's a really sizable chunk of change that you didn't even have to really do anything for it. All the work was done for you in the after hours. Obviously, there was risk on this one. The risk could have been that it could have opened back down here near 17 or maybe even below 17, 16 or something. That's fine. I took that into account, and I weighed the options there. Let's talk about another one, Workhorse. Workhorse was another one that was breaking out on the daily. I love this daily. Look at this daily level right here. This like 17-ish, 1750-ish. Really couldn't get above. It tried once before, couldn't do it. It's had nice little baseline support, so that's always a plus. Hopefully to help me on the way down. But it really couldn't get above. And then this day that I traded, which actually might have been the same day as Neo, it was August 25th. We broke through and we closed above at the top. We got a decent volume spike, not the best, but still 25 million shares, actually almost 30 million shares, so it was solid enough. We closed right at the highs here. Let's actually look at the chart itself right here. So pretty strong getting through all those levels. This is that key level I was talking about that 1750-ish range. And, we started moving up. So as we started moving back up into the 3 o'clock range, that power hour I talked about, I started buying again. And I started buying and I started accruing. And I believe my average entry by the end was about 1790. So a lot of my entries were kind of up here. And we got a nice end-of-day squeeze. It closed at 1820. Now this one dropped. This one dropped a little bit. I was a little shaky. It didn't drop enough really to make me worry. It only dropped, 20 cents or so. Dropped a little more, hung out. This one didn't do much until right before the open. Look at that nice little squeeze we got right before the open. 9 o'clock comes in. You're 30 minutes before the open, starts buying it up. And on the open, we get a quick little squeeze up to 19. I ended up exiting this one, I believe, at about 1870 with my final lot coming out because I exit in lots. As it failed, 19 started coming back down. I just get out with the momentum. It could have squeezed back up. That's perfectly fine. I got my trade 1790-ish to about 19. It was a quick point. That's about 7% almost. So it was a very good, solid trade. This one didn't work out beautifully, but it was the same day as Neo. They kind of moved in tandem there. They aren't related, but it just kind of worked out that way and it was really good. Let's take a look at another one, shall we? Okay, so the first chart I want to show you is GMHI. Now, this is a blank check company. It is a SPAC, Special Purpose Acquisition Company. This one isn't the sexiest one out there, but it's an interesting one, and I think it's one that I was able to use pretty effectively. And maybe this wasn't the best one, but it worked. And I'll show you why, and we'll kind of talk through this. We actually had a trader who was in our chat room when I called this one out, and they said that they traded this one and made money on it. So that always makes me happy. Now, GMHI is, like I said, a blank check company. Their sole purpose, for those who don't know, is to acquire another company and then IPO with them. That is it. They're literally just a company that is designed to merge with someone private and then go public as that new company. DraftKings did that. I believe UTZ, the chip company, is doing that. There's a lot of companies out there. Well, anyway, GMHI came out, and I believe they're acquiring Luminar, which is a autonomous driving vehicle software company. Cool. That works. That's awesome. And SPACs have been very hot right now. Now, the day that this came out, which was 8/24, this stock traded and really didn't do much. I mean, it just kind of opened up here. You had some light trading up here really high, but, that's nothing. That's low volume people who are idiots probably and sprayed up there by accident. But this thing opened up at like this 1150-ish range and then just kind of dropped off and traded along 11 all day. I was watching this one because SPACs can go crazy. They have gone crazy in the past. In fact, let me just show you a couple. SHLL, that was a SPAC that came out, went from $10 to $40 eventually. NKLA almost went up to $100 from $10. They all always start at $10, by the way, in case you haven't figured that out. So these can go crazy if the story's great, if the company they're acquiring is great, if the market really likes what they're buying and the financials and the deal. This one wasn't doing too much, so it wasn't that great. It wasn't that sexy, but it's still a play I made this week, which is why I want to show it to you, because it's recent, it's fresh, and it's something that I called out with people, and some people actually took it. I don't recommend that people hear the trades I call out and take them. I don't. But I like to help you learn. Anyway, going into the close here, this one actually started to perk up right about 3 o'clock. I don't know why that happened. 3 o'clock, people just decided, all right, I'm going to take on that buy. And what happens is a lot of times we like to call that the power hour, from 3 o'clock to 4 o'clock p.m. Eastern, which is the final hour of actual trading, not after hours trading. You will sometimes see a lot of volume come in. That is because big institutions, big guys with big volume, maybe just big players will come in at this point and maybe buy or sell and put in some orders and actually maybe move the stock. We actually saw this one start to tick up. As soon as it crossed VWAP here, which is the volume weighted average price, it's just an indicator I use. We'll have a video on that exactly. Once it got over VWAP, I see that we're kind of approaching highs here. This isn't the greatest play ever, but you know what? I know my risk is pretty low. This is a pretty soggy chart that's not moving that much, so I start acquiring right in here. I end up getting about an average price of $11 and maybe 15 cents, maybe 20 cents. It was all through here I just kind of started buying. And I'm not just blindly buying. I'm watching. I'm making sure that it is still ticking up. If this thing then kind of started ticking down here and started violating these lows going back down, I'm out. You know, it's not doing what I want. It's not breaking out necessarily. Although this isn't the sexiest breakout, this is a news-based breakout. And it ended up closing up here pretty much at the highs. So I added a little bit going in, and I took a pretty sizable position because I knew my risk was light. And then going into the following day, we had a gap up. Hey, yay! This one went from, the 11.20, 11.15 that I was acquiring it at as it was kind of rising up into the open because I was getting favorable entries. Even if you waited until the last couple minutes, you still probably got about 11.40. Opened up around 11.70. Not the best, but you know what? We got something. I waited for opening squeeze. We got a little bit of a squeeze up, went up 5 cents, and then it kind of started dropping. So I got out here on kind of this second failure here because you really want that momentum squeeze. Now, yes, this is not the sexiest one by any means, which is why it's going to be probably one of the last ones I show you. But you know what? It's one that was this week, and it actually kind of worked out. CLSK, I really like this trade. Look at this beautiful daily. This one's kind of ramped up. It's had a couple headlines here and there, and it really formed this beautiful, beautiful flag on the daily. And on this day right here, this is the day I bought it. I want to scoot over so you don't see the next day. We ended up closing right at the highs of this flag. Now, the volume and the catalyst were an issue, and I had less size because of it. It happens. Like I said, not every trade is going to be perfect, but this one closed right at the highs of that flag break, and it worked out pretty nicely. Let me zoom on in here. Okay, don't zoom in, please. Thank you. So again, we kind of baselined along, and I saw right in here, look at the volume spike at the end of the day. Now, the daily volume wasn't stellar, but the volume spike in the last 30 minutes of the day were actually pretty solid. So I ended up accruing in here. I think my average price was about $11.73 or so. I didn't average it out, but I just kind of bought all in this chop. At that point, we're not quite at the level I wanted, but we're close enough. We're at the highest it's been in days since we started forming this flag. I really liked it. I really liked the volume that stepped in, so I started accruing. And the next day, it gapped up right at the level, kind of pulled back a little bit, but gave me that morning squeeze. So that 1170-ish range that I got in ended up topping out at about 1320, so would have been a 1.5. That's about another 10%. Now, I got out of this one as we cracked back below 13. If it ever claims a whole number like that and comes back down below, I like to just get out. It's just how I am. But that one ended up being another fantastic trade. This one wasn't even that crazy. It didn't do that much volume until the end of the day, but it still broke a key level. It's a decent Momo stock. Clearly, this isn't like a blue chip stock. It had some reason to be up there. People were trading it. Some traders were watching it, obviously, and it closed at the highs, got the gap up. That's all I wanted. Let's look at one more one that worked, and then I'll show you a couple that didn't. Okay, let's look at INO, and let's look at the beginning of the year. This was back in March. The first day that I saw this one and traded this one was right here, March 3rd. I'm actually going to show you this on 2 days. This just goes to show you that this isn't necessarily a one and done setup. This one broke out. Look at that huge volume spike. Finished at the highs. I mean, this one finished very at the highs. Let's pull. Okay, sorry, I keep pausing the video and kind of cutting back in because I'm trying to pull up these charts and cut down on the BS time. So this one was doing, a little bit, had some headlines, and look at that volume ramp up going into the last power hour of the day. So you could have just started accruing this one, as it kind of started ramping up into the close. Even if you waited a little bit, you got some baseline support in here that it kind of started forming, started curling back up, and you start accruing. Later, you wait and watch in the after hours as about that, what was, I believe, like a $7 and like 5 cent average entry for me, ended up opening the following day at like 820, 850. So you got about a point and a half right there. That's over 10%. You got a crack here. I got out as it exited. It did squeeze higher. It happens. Again, you can take this and mold it as you want. Now, that was just another beautiful gap on another beautiful breakout. Now, let's look 2 days later, a couple days later, on the 5th. It re-breaks out, re-goes up. This one's clearly not done. They tried to fake you out that following day where they kind of chopped around. The following day, we punch up and we close at the highs. Let's zoom on in here, and this time I'll just go ahead and show you because I know we're getting long on time here. Is this August 5th? Nope, this is the 3rd. Here we are. So August 5th, look at this one. Look at this one. This is the nice strong day I'm talking about. Finished right at the highs. Really strong, steady volume today. Really girthy. This is a Momo stock that a lot of people are watching. It finished right at the highs. I don't remember, honestly. I didn't write down my average price in here. I just kind of accrued in here. And it ended up gapping up from, around 950 to about 1050, 1075. That's another quick point, another quick 10%. And on top of that, if you were patient, you got a nice squeeze up another 2-3 points, depending on how patient you were. It's not rocket science. If you guys take a moment, you think about kind of the logic behind this, you're looking for that momentum. You want the trader's eyes on this stock. You want it breaking an important level. You want kind of the catalyst, the volume to push through. You want it to finish on a strong note. You don't want it to finish soggy. People will get weak knees and get out. It can be risky, though. Let me quickly show you 2 charts of ones that didn't work. Okay, first one I'm going to show you here is SOGO, and all right, you know what, this one technically kind of worked, but it really wasn't worth it, and it really wasn't that great. Look at this nice little breakout on the daily here. This one's actually 2 days late. It already broke out a day before, came in with even more volume, finished even stronger, and finished at the highs of day here. So let me zoom on in real quick because I want to speed this up for you guys and show you this day that I'm talking about. That's this day right here. You had this day, which was decent, but it didn't really close that strong. It kind of fell off. But the following day, look at that strength, consolidation in the last hour, last 30 minutes. Look at that volume pile in. Look at it start ticking up. And you could have definitely accrued some here thinking it was going to squeeze higher. And it looked like it was. You got up to $6 and it just kind of did nothing, kind of fell off and sogged off. So, you may have still made money on this one, but, it wasn't going to be that stellar. And, sometimes they just don't work out. Let me show you one more chart. This one didn't work, and I want you to see what it looks like when it doesn't work. That way you don't think that this is the holy grail of trading, which doesn't exist. Okay, so this one is SHLL. This one just recently happened on August 24th, a day before that Neo and Workhorse trade. Sometimes they don't work out, but look at that breakout on SHIL. Now, you could argue, oh, this one went up too much. That's why there could be a correlation on here, but you had this awesome breakout. You had that awesome volume. It finished so strong, and it broke out of highs. I mean, broke out of highs, and it looked really commanding. And sadly, as you can see, this one baselined at the highs, ran up into the end. You had good volume all day. Didn't work out. This one ended up closing at about $40.50, opened down at about 37. Now, that's 3 points, and compared to the other ones, that's a lot of points, but, percentage-wise, it's maybe what you'd lose on one or make on one, not even that much. You'd probably make more on one of the winners than you would have on this loser. So as long as your win percentage is right, your risk reward here is at least favorable. That's it, guys. We're running a little long on this one. I didn't want it to be this long, but I was really excited to show you some of these charts and some of these trades. I really think that it has some potential to be a good strategy. Like I said, I've traded this on and off in different periods for the last 6 years. It just really depends on if I'm trading Momo stocks, if I really like the setup. Sometimes they happen in clusters. Sometimes you won't see them for a while. You got to be picky on this one. And I wouldn't just buy any stock because it closed at the highs, especially if it's a stock that follows along with the stock market. Because guess what? If the market's down on bad news, that stock's probably following. That's also a key here. These stocks don't really follow the stock market that much. SHLL maybe a little bit, but not really. It's another acquisition company. So, there's a lot of parameters in here. You need to take this strategy, make it your own, need to understand why I like this, what makes it tick, and why I'm able to make, a pretty sizable amount of money on this strategy alone. It won't work all the time. It won't work in many market environments. If we're in a bear environment where a lot of stocks are going down, or if we're in an environment where there's not a lot of Momo stocks, it won't work. You should take this strategy, maybe try to fit it into your own parameters and try to see if you can help have that work for yourself. Maybe you just wait for the morning squeeze the following day. You don't like overnight risks. That's fine too. The key is here that you need to take patterns and you need to try to boil them down and understand why they're happening. You need to understand the psychology in the market, because then you can help anticipate it. You can help kind of hedge the bets in your favor. And that's all we do as traders. I'm going to end it there. This tapped over 30 minutes. I really didn't want it to be this long. I apologize. But I hope that this was helpful and informative. I will see you next time. And as always, safe trading.